We might be live already. Hi everyone, Letitia here, coming to you another Thursday afternoon for another edition of my weekly Money Matters webinars. And the topic today, as announced earlier today, is reverse mortgages, all about reverse mortgages. And joining me today is our friend and experienced mortgage broker, Mr. David Grossman. Welcome, David.
Hi, Letitia, how you doing?
Great. Thank you for joining us today.
Thank you for having me. It's nice to be back on your show.
I really appreciate it. Thank you, David. David joined us back in September talking about alternative lending. As some of you already know, David is an experienced mortgage broker. Is it 15, 17 years of experience?
18 years. It keeps getting longer.
Congratulations.
Thank you.
And David specializes in working with self-employed individuals and investors, real estate investors. And one of the other niches that is becoming increasingly popular are our baby boomers, senior population. And today's topic will be of particular interest, I would say, to them, to baby boomers, and those of us who have baby boomers in our lives and we love them. And the reason I wanted to do it, even though we briefly touched on the topic of reverse mortgages in our earlier presentation, David, when you were last on our show, I feel like we didn't do justice to the topic, and this is a topic that is often misunderstood. And I recently saw an ad on Facebook from one of the providers of this product, and the comment section said things like, "Oh, what is a reverse mortgage? Oh," and there were other comments saying, "Oh, don't do it, it's a bad idea." So why don't you kind of clear the air and, if you don't mind, tell everybody what is a reverse mortgage, and then perhaps tell people when this sort of product is actually appropriate and for whom it would be appropriate.
Sure. So the product was really designed for seniors. Some people like to call them retirees. Apparently seniors don't like thinking of themselves as being seniors. So, but really it's designed for people who, are at that stage of their life where they've maybe accumulated some assets. They own a home and there's equity in the home, but they're also not as active in their business. They could be retired partially or fully. So they don't have the income that they once had, but they're comfortable in their home and they want to stay in their home. They could also be in a situation where maybe they want to help out a family member. If you have a child, an adult child especially, who wants to buy a house or any kind of property, you need a substantial down payment right now, and it's hard for people to earn and save and build that down payment. So it's a solution for people who want to take equity out of their house. And some of the misconceptions out there you alluded to are largely misconceived. So I think some of those ideas come from the United States, to be frank, where there are many different companies competing in that particular space. In Canada, it's a highly restricted area. There are laws in place to protect consumers, and the fact is there are only really two companies who offer the reverse mortgage in the sense that most people think of it, institutional lenders who are lending money at very reasonable rates. We're talking a little bit above your regular bank rates, which are now around 2% or lower. So maybe you pay 3%, you'll pay 4%, but it's for people who don't have that cash flow. So you get to take equity out of your house. You can take it out in a lump sum, or you can actually take it out in recurring draws. Like if you need to get paid $1,000 a month, let's say, just to stay afloat. And it's a very good option for people. You have to be at least 55 years of age. And this is absolutely not true, this business about losing your house. You have to pay your property taxes, and you have to keep the house insured. But the idea with the reverse mortgage, at least the reverse mortgage,
we should be doing anyway.
You should
be doing that anyway as somebody owning a property.
Well,
Yeah.
exactly. With any mortgage company, you're basically, in default of the mortgage if you don't pay those things, because property taxes can come ahead of the mortgage. So you're required to pay, you're required to keep those up to date for your own benefit and for the benefit of the lender as well, so that they keep their priority of their security, the security of their loan. And so it's a good option for many.
I just want to also contrast the concept of a reverse mortgage, David, to what people are perhaps more familiar with, which is a home equity line of credit. And I remember reading one of the comments on this post and said, "Oh, just do a HELOC. It's better that way." So could you please explain for our audience, what the difference is between a HELOC, also known as a home equity line of credit, and a reverse mortgage? And then please turn that on.
Okay. So a HELOC is also a good solution for getting equity out of the property. I mean, we don't, at Rock Your Mortgage, we don't like,
pigeonhole,
sell or promote one solution over the other. Every situation is different. There are differences between those two options. First of all, with a HELOC, a home equity line of credit, yes, if you qualify, you are more likely to get a lower rate. However, you have to qualify, and we're talking usually about people who don't have the income to qualify for a traditional mortgage. Most HELOC products out there, the lenders are going to want to see that you have income to service that debt, because what will happen is when you hit the maximum of that HELOC, if you don't have income, what happens next? The reverse mortgage is built for people as a long-term solution for people who don't have income. And the rule is, with the reverse mortgage, the product is set up in such a way that you can stay in the house as long as you're alive. You think about it, you could borrow money when you're like 55 years old and really not have to pay it back as long as you're alive, as long as you're living in the house. So that could be like literally decades. So
Yeah.
that's what you're getting with the reverse mortgage. It's not meant as a short-term solution. If you just need money for 6 months or a year or even a couple of years, there may be better options for you. But every situation is slightly different. We look, and the way we operate, Letitia, we look at every situation. What are the people's needs? How much money would they like? How important is it that they get that money, and what option is best for their needs?
Got it. Thank you, David. And and one of the differences also that you had mentioned to me is that with a HELOC, people are required to make some form of payment, right? You can just.
Well, it's possible. Some of the HELOCs, the way they work is they will automatically charge the monthly interest to the HELOC, right? So technically speaking, there are some HELOC products out there where you could literally go to sleep and not worry about it until that day of reckoning comes, when they say you hit the maximum amount. And they call you and you say, they say you've maxed out on your HELOC. You have to start making payments. So, so though technically you can go to sleep for a little while on it, eventually that day's going to come. So it depends, right? If it's a short-term money that you need, a HELOC may be a good solution. As long as you have an exit plan, right? Like, what happens when you max out on that HELOC? You need to have a plan.
Got it. Because then what could happen is, if you don't have the money to pay, could they potentially force the sale of the property?
Well, absolutely. That's how mortgages work, right? So when people don't meet the obligations of the mortgage contract, then the lender has the right to force their security or realize their security by forcing the sale. So there's a legal process that's involved. And, you know, people who borrow money, they need to think always, what are their ongoing obligations, and what happens when that mortgage matures? If it's a term of 1 year or 3 years or 5 years, you have to think ahead. Is that
Yeah.
mortgage renewable? Will the lender renew the mortgage? And what if they don't? So you always need to know what you're getting into.
Got it. Now, with a reverse mortgage, David, again, the difference here is that there's no payback required. In other words, a senior living in their home, and many studies have shown that seniors, when given a choice, would rather stay in their home as long as possible. And you made a good point when we were informally chatting earlier today, that especially in this day and age, and we all know what's happening in retirement homes, well, not to get political, but a lot of people would rather not have to go into a nursing home right now, right? I mean, people are, they're not allowed to see their loved ones. We all know what's happening. So many seniors would do whatever is required to remain in their own homes. However, if they have medical expenses to account for and they need to hire nursing care, especially, we all know that that is not free. It comes at a cost. And sometimes we all know pension incomes are often modest, especially if seniors are relying on just the CPP and the GIS and these government pensions. So we're in a situation where a lot of Canadians, especially baby boomers, are property rich, but cash poor. They're sitting on a lot of home equity, and yet they may not be living a very good lifestyle. And the reason, we all know, we've had a very jubilant real estate market, especially in the GTA surrounding areas in the past, upwards of 10 years now. We've seen double-digit appreciation in property values. Pension incomes, on the other hand, have remained very, very modest. Okay, and sure, I know some of my audience are real estate investors, people that have other sources of income. Good for you guys. We're talking more the situation of we have somebody joining us live. Wonderful. Via Zoom. So yeah, we have, hi Anna. We have a situation where these seniors are now, and because they have low income, as you were saying, they may not be able to qualify for a traditional line of credit to access home equity that way. So what are they going to do? Many of them do not want to sell their home and downsize. Of course, that's an option. But I can tell you, my own parents, that's the last thing they want to do. They said, we will stay here. They put their heart and soul into their house. They made it their home. They lived there for, in my case of my parents, over 20 years, but many other people even longer than that. So they don't necessarily want to downsize. They like their home the way it is, and this is a way for them to, again, access on their home equity to improve their lifestyle today, not have to live like a miser in a beautiful home, but you're actually not really enjoying your retirement, and even less so if you have to all of a sudden have to pay medical bills to support your lifestyle.
That's right. So there's, a number of reasons why people could be borrowing money. We mentioned earlier, helping an adult child to purchase a property. If maybe, like you said, you want to start enjoying your life a little bit more, you don't want to live from month to month worrying about how you're going to make ends meet. If the equity's there, you can enjoy vacations. I know people are concerned about travel now, but I really think there's some great opportunities to travel now, actually, and also people can, if they are working, they're finding out that they can work remotely. They don't need to be local anymore. So
That's a whole different
I'm not
topic. Yeah.
I'm not a candidate for a reverse mortgage, but if I was, I would seriously think about taking the equity out and buying a place in Playa del Carmen and hanging out at the beach also, right?
Got it, David. Well,
Yeah.
I like your line of thinking, and you know what? We're gonna be doing a webinar about those topics in a future session of the Money Matters
Right,
webinar.
right. But practically speaking,
Yeah.
You're right, Letitia. Sometimes there's a health issue, and nursing costs are very expensive. And sometimes seniors need to make modifications to their home.
Yeah.
You were right what you said. They're not on, like, even before COVID. They would want to stay in their home as long as they could. Now, especially, they're fighting off. Nobody wants to move into a retirement home now due to COVID. They want to stay put. So they may need money to get assistance, maybe to bring in somebody clean. There may be something more serious. And as you mentioned, nursing care is very expensive, and making modifications to homes is something that seniors need too, right? Getting the proper bars so that you can live in the property comfortably and enjoy your life and your peace of mind.
Now, speaking of that, David, I do want to make a little aside. I previously had a presentation about a product called My Dignity, which is also meant to help seniors with some of these costs. That could be considered as an option as well. And again, I would encourage people to refer. That was actually the first or second Money Matters that I did. But of course, that is a product that is meant to be used for medical expenses for seniors, whereas this option, there's no restriction as to what you use the money for. It's your money. You get to use it however you may like. Now, speaking of the option of helping an adult child, so again, this is a very real situation. Property prices in the GTA and surrounding area have been appreciating a lot. The young families of today would love to own property, but many are simply, priced out of the market. And many parents would like to help their children, and I've come across parents that would have liked to do that. If they were looking at the traditional marketplace of mortgage offerings, they would not even know that this is available, because a product like this is only available through mortgage brokers like yourself, correct, David? They can go to
yes. Well, I mean, some of the banks, if you go into the bank and you talk to the right person, they might say, oh, we can introduce you to somebody. But the advantage of dealing with a mortgage broker is the mortgage broker is not limited at all. We deal with two different companies that provide the reverse mortgage. We also deal with companies that provide HELOCs and private loans. We have a private lender who is actually lending money at rates below 5% with no payments for 3 years.
What? That is
right? So,
unbelievable.
because look, when you're 55 years old, you're not going to qualify for a very big loan through the reverse mortgage. So, right? The older you get, the more money they're prepared to lend you. So if you need more than what you would qualify with the for regular reverse mortgage, we have other options. So you want to be speaking to a good mortgage broker who's going to help you find the right solution for your needs.
I hear you, David, and thanks for mentioning that as well, because again, with the concern that people have is that, well, but what kind of loan, how big is this loan going to get if I'm not making any payments? And I want people to know that the younger you are, the less you actually can take out in the form of a reverse mortgage. So there are safety mechanisms built in to prevent over leveraging, right?
Well, right. Because of how, the age factor, right? Like they're not going to lend. I mean, they're not looking to have you upside down on your mortgage. They don't want you owing more than what the house is worth, because at the end of the day, they're going to be left holding the bag, right? So, so to speak. So, but yes, there's a good slide that we have, which we can show, but it's telling me that I can't share screen.
Oh, sorry, I'll have to make you a host. No, I'll have to make you a host. Give me a sec.
Sure.
You know what? Okay, more make host. Okay. Yes. Okay. And everyone watching, thank you. If you have any comments, please put them in the comments, and David will answer them towards the end of our conversation.
Okay, so are you able to see the
Yeah,
slide?
perfect. Yeah.
Okay, so as we mentioned, the loan amount depends on your age and also the value of the property. Those are the two factors. So the older you are, the more money they would be prepared to lend you. The amount of money that you can get would normally range, let's say, from 20% or 25% of the house value, right? Like if you're 55 years old and your house is worth $1 million, you might get a maximum loan of, let's say, around $250,000 or thereabouts. And if you're, let's say, in your 80s or 90 years old, you could probably get closer to around 60% of the value of the house, right? So older you are, the more money you can get out of the house. As we said before, you have to continue to pay your property taxes and insurance, and the mortgage is good for as long as you are living in the house. There is no real maturity and date by which you must pay back that mortgage.
And
Okay.
in the case of a couple, David, sorry for interrupting. In the case of a couple, it would be until the second passing. So, right?
Yeah, that's right. It's based on the younger person.
Okay.
Right.
Yeah.
So
Yeah.
as long as the younger person's living in the house, you're good from the couple. Correct.
Oh, okay.
Okay. And the last point and then we'll show that slide that we were talking about. The last point, which could be of interest, is that you can actually own up to a sixplex and have the reverse mortgage. So imagine if you
That's
have
interesting.
multiple tenants, right?
Yeah.
That is interesting. So you can enjoy the income from your tenants. Kind of a cool thing as well.
Because it's still considered residential lending, right? It has to be a residential property and up to 6 units.
That's correct.
They consider it residential. That's awesome.
That's correct. Yeah.
Okay.
Yeah. So here's a scenario that we have. So this is looking at a house that, let's say, is worth $800,000 today. And let's say you get a loan of $350,000 on that property, a reverse mortgage. So you're 60, 65 years old. You take out a reverse mortgage for $350,000. Actually, this is the case for a 70-year-old. That's what this is.
Okay.
A 70-year-old. And you get a loan for $350,000. The interest rate used in this example is actually high. This was because rates are lower now. So the result you'll get is actually more favorable than what you see here. So this example shows what happens over a period of 15 years. What happens over a period of 15 years if you borrow $350,000? Does the equity in your house erode? That's the concern that people have. Well, if you look back at the real estate market in Canada, especially, let's say, in the GTA, the Greater Toronto area, which is the market that I'm serving mainly, I license to anywhere in Ontario, but for the last 20 years, I would say safely that real estate market has been going up by more than 3% every year on average, right? I mean, exactly. It's been going up a lot higher. But so this is a conservative view, right?
Absolutely.
A conservative view. So if you look at the figures, if you look across the center of the screen, you see the first line, it says estimated home value. Current value is $8. So that's what the property's worth today. If we assume that that property goes up in value by 3% every year, in 15 years, the property will be worth $1.246 million. That's what the value of the property will be, right? On the next line, it says initial advance, $350,000. So that doesn't change, but the interest that's accruing, right? Because you're not having to pay interest. So that's where the next line, it shows that over 15 years, the total amount of interest that accrues is $499,000. So you know your grand total mortgage is going to be up around 850, right? There probably should be another line in this example to help illustrate that. But you can see basically the idea is simply that your house value is growing at approximately the same rate as the mortgage, because because the house value goes up and so does the interest that's due or
Yeah.
that's accruing. And at the end of the day, you see in 15 years, how much equity is left in your home. It's almost $400,000, which
Yeah.
was just slightly less than what you have today. So
And
this idea that that your equity is going to erode is highly unlikely, and that's not, based on the last 20 years, it's very unlikely that would happen. And anyway, you also have to think about what what your lifestyle. You've worked your whole life. You now own this property. You want to stay in this property. You need access to money for one reason or another. Maybe it's just to make ends meet. Maybe it's to help an adult child. Maybe it's to pay for nursing. Maybe it's to travel and buy a condo in Playa del Carmen. Whatever the reason, right?
David, yeah.
Whatever the reason, now you have options to do that. You have options to do that. And even if you did use up some of the equity in the house, at the end of the day, if you can help a child today, right, and live the life that you want to live, there's something to be said for that.
Yeah, David, I agree with you. And um, I agree with you because I wish my parents were to do this. But, I know other parents who have even gone as far as giving their children private mortgages and stuff like that. This is an option. And you know what? Any baby boomer parents that have homes that have appreciated and they're thinking, well, eventually, they're going to pass this property down to their children anyway. But they have the option of waiting until literally their last hour, and that transfer will happen automatically. We are living in times of increasing longevity. I know that being in the insurance industry, that's been the trend in Canada. Every 10 years, longevity goes up by about 1 year in average. So right now we're looking at about 86 for women, 84 for men, average longevity in Canada. And I do hope that trend continues. People are taking better care of themselves. We, have access to faster healthcare than in the past, and life-saving procedures, things that were not available one generation ago, okay? I know right now there are certain issues with the healthcare system, but let's not get into that right now. But bottom line, that's been the trend, people living longer. So yeah, if your intention is to pass on this home to your children or grandchildren sooner or later, you could wait until that final hour, or you could possibly do something for them that they could actually enjoy today, as opposed to, your children with the appreciating real estate market. Many, like I said, many millennials are completely priced out of the market. Or they're being forced to move to cities further away because they simply, they just can't afford the GTA anymore. So they're looking at satellite cities and so on. And so that's a lifestyle question, whether they even want to do that, but they're being priced out. And many of you, I know, are fans of Mr. Grant Cardone. He's a little much for me these days, but I still like the guy. But one of the things he said, he's an apartment building investor. He's very concerned about the glut of single family homes that are going to be essentially flooding the market once all these baby boomers pass away. So he's concerned that because you're going to have a flood of single family homes, because, okay, let's face it, parents, want to live their family home to their children. What are the chances that the children are going to want to be living in that exact home? More often than not, they end up selling the house, buying the property more to their liking. They may already have their own home by that point in time. So the inevitable is going to happen. That property is going to get sold anyway, okay, more often than not. And you have an option of now helping your adult children sooner rather than later. And now they can start building equity in their own property with your help, with your loving help. It's just something that I think more parents should think about. And David, I don't want to talk forever here. I remember speaking to the representative or one of the reverse mortgage companies. She gave me the example of a gentleman that was 90 years old. He was now living in a $2 million home. He had 3 adult children, and none of his children had purchased homes as of yet. So what this man decided to do once he found out about this option, he took $100K for each child he gave them, and now via reverse mortgage, and now he was able to, now each child was able to purchase a home in their desired area. They purchased condos in this case, because even condos are not inexpensive in the GTA. So he got to see the fruit of his labor. He got to see his beloved children benefiting while he was still alive, okay, as opposed to, yeah, okay, maybe this was going to happen once I'm no longer here. So something to think about for any baby boomers watching this, and for those of you who are perhaps in a younger generation watching this, maybe your own parents don't know that this is an option, and if your own parents are in a situation where either they are living on a very tight income because their pensions are just not enough, or they'd like to help you and they don't know how, introduce them to David, okay? That's all I have.
Thank you very much, Letitia. And if they mention that they heard about me from your show, they will receive a special gift. That
Wow.
they should tell me that they heard about me from your show. I think you have a great show. I really like what you're doing, Letitia, and I'm always happy to be a part of it. So thanks for inviting me back.
My pleasure, David. That's very gracious of you. Thank you so much. Do you want to put your contact information up on the screen again for people to see? I think it was like the last slide of that presentation.
Yeah, good point. Let's see. Ooh.
And thanks for joining us on the webinar, Anna. No, I don't see it yet. You'll have to share your screen again.
I know the problem. Yeah.
Oh, yeah, you're still the host.
Okay,
so
here, yeah, I'm getting there. Here we are.
Okay, there you go. There's David's contact info. Yeah, you can see it. Yeah. So David at rockyourmortgage.ca.
Yeah, part of Real Mortgage Associates is the brokerage, and they do all our compliance and in our payroll. And Rock Your Mortgage is where we do we talk to great people like Letitia, and hopefully some of her wonderful contacts too. And always happy to help if anybody has questions. Call me anytime.
Yeah, Anna, who joined us via Zoom, says she's going to get in touch with you. That's awesome, Anna.
Awesome, thank you.
So thanks everyone for watching. My pleasure. Let me, can you pass the hosting back to me, David? I want to go back to Facebook to see if there were any questions on there.
Yes.
Okay, thanks. Okay, let's see if there were any questions. Sorry, that's wrong. Screen. Yes. I have to go into my wall. I was watching somebody else's wall earlier. Okay, let's see if there were. Oh man, did we even? As far as I know, the live works. Like we.
Anthony was very well behaved today too. He should get a medal. Good job, Anthony.
Better. Slightly better. Thank you. Okay, awesome. Okay, I didn't see. Okay, no questions. Okay, thanks. Okay, thanks, David. So we can, I think we can end it here. Thank you again so much for joining us today. And I look forward to staying in touch and perhaps having you as a guest in the future again, talking about other solutions and opportunities.
Always a pleasure, Letitia. Thank you. Looking forward to next time.
Thank you. Take care.
Take care.
Thanks for joining us, Anna. Thanks, everyone. Have a great rest of the week. Bye-bye.
Bye-bye.